Toronto is in a housing slump and we're not seeing any significant signs of relief this spring. If this continues on for just one more month, there's a good chance any potential buyer pool that would have existed the first half of 2025 completely checks out, goes on summer vacation, and revisits the market in fall or next spring 2026. If you're seeing me for the first time, I'm Jonathan Lee, a Toronto area realtor based out of Etobicoke. I do monthly real estate content, so if you're looking for insights on what's happening in Toronto real estate, subscribe to my channel. In April, we saw 2,129 sales in the 416, down a sharp 18% year over year, while active listings jumped 41% to 10,563. But this number alone doesn't tell the full story. It masks big differences between housing types. Combined between both the 905 and 416, detached sales are down nearly 22% year over year, with prices dropped by about 5%. Townhomes and semis are also down, though they're holding up slightly better in the 416. But it's the condo market that's getting hit the hardest, with sales down over 30% year over year and average prices down nearly 7%. These numbers sound bad, and they definitely are. For the cumulative year to date, we're seeing the lowest total sales in Toronto in the 416 in 30 years, having not even broken 7,000 sales through April. The 30-year average is about 10,500 sales over the same time period, so we're about 33% below the average sales. The big cause of this is, of course, the tariff war and what I'm calling uncertainty fatigue. Global instability and a lot of bad vibes in the broader economy are keeping buyers and sellers frozen. Many would rather wait and see than make a move they might regret. And as we edge closer towards the end of the spring market, which in my last video I called the mating season of real estate, some would-be movers may decide to sit it out completely until fall at the earliest. But here's a bit of potential upside that we might see percolate and gain momentum as we head towards the summer. Canadian consumer confidence just saw a V-shaped bounce in the last couple of weeks, which is good on paper. But when you zoom out, confidence is still sitting at levels we haven't seen consistently since 2022. So while people are feeling a bit better, they're not exactly acting on that optimism, at least not yet, especially in real estate. However, a couple market positive events could trigger home movers to stop delaying and take action sooner than later. One such event might be interest rate cuts, which may be back on the table come June and July, though it's tough to say, especially as inflation is starting to rear its ugly head back at us. And of course, a trade deal with the US, which would bring some much needed stability back into our economy. This just might be enough to take consumer confidence back from the brink. If these rate cuts and trade deals occur over the next 1.5 to 2 months or so, I truthfully don't know if we'll see a summer rush or if market moves will wait until the fall. When we look at 2020, the COVID lockdown ruined the first half of the year, limiting people's ability to sell and purchase a home. Literally, you couldn't go into a seller's home and no one is buying something sight unseen unless they're getting a crazy deal. In 2020, the spring market got backloaded into the summer and 62% of the year's sales happened between July and December. In a typical year, that's usually flipped. The majority of sales usually occur between January to June. However, circumstances were obviously different then. The world was on lockdown and the way we lived in our homes changed overnight, necessitating a move for many claustrophobic homeowners. Furthermore, interest rates had dropped to zero and we were told that it would stay that way for a very long time. Inflation hadn't kicked in yet, and with COVID relief funds and low consumer spending overall, I think everyone felt richer than they were. We're obviously not in those times, and as I said, inflation is rearing its head, and if anything, many of us are feeling poor, so we're very unlikely to see a drastic bounce, but should events allow them, we could see a bit of a summer bump in sales. And if we do see a bit of a summer bump, I want to remind anyone that is considering buying a house this year, not a condo, at how quickly the market can change. Right now in the city of Toronto, you can go on the MLS and see over 12,000 active listings that are on the market available for purchase. That's a lot. But when you're a home buyer, your criteria and budget will narrow down that list and options quite a bit. For example, I'm in Etobicoke, so I'll often hear something like houses with a minimum of 3 bedrooms under 1.15 million. From here, we get 121 houses, so still a good amount of options. But then I find most homebuyers also get really specific about criteria. Like they settle on a large area and set minimum standards that the home needs to be. So let's say houses under 1.15 million in West Etobicoke that don't need renovations. Based on area and budget, we get 10 houses. But as you go through this list, you start to eliminate based off condition and how functional the home would be for your needs, only to find out that there are 4 homes that would actually work for you, which isn't bad. If you go out shopping today, you have 4 options as a buyer, or you probably don't have to compete and you can make an offer under asking price and hopefully still get a great price. But do you think there are circumstances where over a 2 to 5 day period, some sort of news event changes people's confidence and 4 different buyers who had been sort of hovering around for a while decide to buy those homes that could have worked in your area? I mean, obviously the answer should be yes. 4 people making that decision over a week isn't that crazy. I mean, 4 different people walking into a car dealership and buying a $80,000 car all in the same day isn't crazy and probably happens a lot in Toronto. In real estate, we often say that it only takes one buyer. Only one buyer buys one seller's home, which is the big difference from the stock market, where thousands of buyers buy the exact identical product of thousands of sellers. What happens when those 4 homes sell is a market deficit appears, which changes the balance and urgency of the remaining potential buyers. Potential market buyers are viewing the MLS daily, sometimes multiple times a day, and when an abundance of options suddenly disappear over a relatively short period of time, the market has, at least temporarily, shifted. And when inventory in one large area shifts, it's likely shifted for that same similar price point in other areas as well. At which point, over a 1 to 2 week period, the inventory of a certain price range across the city gets squeezed quickly and FOMO sets in. Now, to be clear, I'm not suggesting with any certainty that this is a likely outcome within the next 6 to 8 months. We have so many watchouts in our economy that even if we see a semblance of a turnaround, it's unlikely to last long term while our economy continues to struggle. And we could very well go through the rest of the summer with a stalled market. But I want to reiterate for both would-be buyers and sellers that the market conditions are not as vast as it appears and options can dry up rather quickly. Instinctually for the freehold market, I also feel like we're past the worst of it. I don't sense that house sellers are willing to sell at prices much lower than they are today. And for sellers to accept lower offers, we need more really bad, really scary news, which as our current news and event cycle stand, I'm not expecting anything to creep up on us. The condo market is a bit of a different story. I think it's very likely we stay challenged through the rest of 2025 until the overall market becomes more robust or average prices, especially for 1-bedroom units, have dropped more significantly. Things will stay challenged. With condos, the big problem is you have this large cohort of young adults in their late 20s and early 30s whose older friends and siblings bought condos 5 to 8 years ago and got burned. These older friends and family, they can't leave them because they would be selling at a huge loss and are now chained to their 1 or 2 bed units, though they were told at the time that it would be a great starter home, would appreciate, and they would build equity, which has been everything but the case. So instead, many young adults are now eschewing condo ownership, continuing to either rent or stay at home and saving to buy their first house. Investors are not buying condos because rents have dropped and the financials don't make sense. So for condos to make sense again, the financials need to change by either dropping price, dropping interest rates, or raising rents. So that's it for me this month. This is still a complicated, buyer-skewed market, but a dynamic one. I'm leaving the door open for a market shift based on change in buyer sentiment, but especially in the condo market, the fundamentals will take longer to catch up. If you want to talk through your options, you can book a call with me using the calendar link below. Once again, I'm Jonathan Lee, a Toronto area realtor based out of Etobicoke. Thanks for watching, and I'll see you guys next time. Cheers.